16th of February 2017. My name is Piotr. Welcome in our live trading room. Quick risk warning, guys. FX, or different way, trading FX on margin carries a high level of risk and may not be suitable for all investors. You can sustain a loss of some or all of your initial investment. So please do not invest the money that you cannot afford to lose. Seek education and gain experience before risking real money. However, past performance doesn't guarantee future results. All right, so we are good to go after this risk warning. What we are going to do, the reason that we have a live trading room today, not tomorrow, as I mentioned on Twitter, mostly because of the price action. So there is a chance that we are gonna to see some trading opportunities. But today's meeting not gonna be as usual, because I would like to take the opportunity, once we are waiting for US data, I would like to take the opportunity and present you the more advanced risk approach I'm doing, especially when doing day trading. All right. The first part, the basic stuff related to risk, as you may know, is already available on our YouTube channel. All right, and I mentioned on that video, I mentioned that one day I'm going to present more advanced approach to the risk. So basically, what I'm looking for right now, briefly, let's have a look on a few charts. All right. So what I'm looking for right now, on euro dollar. First important thing, let me clean the chart a bit here. Just a second. Euro dollar, as per the chart I published yesterday on Twitter, right? Looks like we, or market or bulls, we are trying to confirm the breakout, trying to hold the prices above the broken trend line. The thing is, we were also able to break through Friday low, all right? But the thing is that, as I mentioned on Twitter as well, we are within the weekly open and weekly high possible supply zone, all right? So we are testing this this supply. The thing is, if you are a bull, right? If you are a bull, then you wanna see the breakout, for example, right? Or you wanna see the pullback towards 106, 1590, right? But for sure, if you are a bull, you are not buyer here. That's what I said on Twitter as well. If you are a bear, then that's the level where you are looking to sell. All right, you are looking to sell within potential supply zone. So that's the daily chart. So let's go lower to 1 hour chart. Let's have a look what we have here. All right. So what we have here around current level. What we have here around current level, we are here, So yeah, we've got this potential stop hunting, and we have this potential stop hunting, and they are equal. They are equal, right? So within this green supply zone based on a daily, right? Looks like we may find something. We may find something based on intraday, right? And that's something like this. So still we have some space towards 106.50, 106.56 to check what's going on. If we are not gonna go there, then on 5-minute chart there was a first break. On the 5-minute chart, what we have, you know that I like, sometimes simply we are not gonna to get the supply or demand zone, and then somehow we are looking for possibility to join or rejoin the market, right? So my fast lines usually based on the last 2 swings, right? So if there was a move to the upside, pullback, move to the upside, so I'm connecting last 2 lows of the last 2 swings of the move to the upside. That's my fast line, right? Break through the fast line, that's some kind of the danger, right? So what we have here, we have, that's our last swing when we made new high, because here we didn't make new high yet, okay? So that's the last swing. Where is the previous high? Previous high is somewhere here, and that's the last swing here, right? In this case, it's tough to draw the line because we are going to get the horizontal line. I'm doing in case of this one, right? When there is not that clear, what I'm doing, that's my low, that's the high. And in case of this rise to the upside here, right, what I'm looking for to avoid this horizontal line, what I'm looking for, okay, we started here, okay, that's where we went higher, we failed to make higher high, we pulsed back, we went a bit higher, and here you can see last black candle, pullback candle, before we made this new high here, right? So for me, that's the second low, right? Here. So I've got low here, so that's my line connection, right? And looks like we once, after the ECB minutes, 40 minutes ago, we broke through the line, but we were able within 10 minutes to recover the losses here and get back above the trend line. That's telling me that we've got the big chance to make a new high. We didn't, well, maybe we did. It's like double top, but we've got the chance, because of the failure of this break, we've got the chance to try to hit those stops here, and market may be able to push prices towards our supply within 51, 56 level, right? So once we are gonna to push through this high, we are gonna to get new fast line. In that case, I'm going to take into the consideration the whole move to the upside. All right. So in case we are not ready yet, but in case we are going to get there, that's my new fast line. That's going to be my new fast line. All right, more or less. Anyway, still some space, and we are waiting for US data. Dollar yen. That's our possible demand. All right. If we are gonna to make the widest possible, we hit already this demand, right? but I would like to have the narrow possible, so I'm taking the shadows on the bottom, but I'm taking the bodies here. Okay, so my potential demand zone includes shadows at the bottom, but only bodies here at the top of this demand. So I'm looking for maybe spike to the downside after the data and rally back. Okay, so what's gonna be my target? What's gonna be my target if I'm gonna to get this demand zone? I have to check if I have one possible 1 to 3 risk reward ratio, right? So what we are looking for? We are looking for something like move lower, break out of the channel, maybe retest, maybe not. And usually, if we are breaking the channel, if we are breaking the channel, sorry, yeah, that's gonna be better. Usually, as I've explained a few times, usually the second point of that channel, right, is the first potential target, right? Okay, so we have to simply measure if we have 1 to 3 risk reward ratio. And no doubt we have even almost 1 to 4 risk reward ratio, right? So that's the zone I'm gonna to use after data. Remember, guys, we don't know, the big guys are removing orders, big chunk of the orders, or all of them, or they don't want to wait before the events. Of course, the events are not so important today, but anyway, that's how we do, or that's how I do, and how I'm explaining to you this stuff. So that's the dollar yen, right? Euro dollar, dollar yen. I would like to get back to yesterday trading room, and simply I would like to say I'm sorry because the possible entry on euro dollar was almost to the pip what we discussed yesterday, but simply strong US data put me into the dollar boot camp. That's why I put on the Twitter that we made this new low, but it's not buy for me because of the strong data. But those guys, look, those guys use good data to make completely opposite thing. The same happened with pound dollar. And a week ago, if you remember, I started to talk about this entry, and we get here into the point. Shit. So me, and if you like me were in a dollar boot camp, we didn't lose the money, but shit, we didn't earn the money. That's the pain for me, because the entries, the levels were so good, but simply the data, US data, scared me a bit. All right, that's what happened. Anyway, for now, I'm not so sure about the pound. But I like what's going on euro dollar, because I think we are going to get intraday selling opportunity. I think we are going to get the intraday selling opportunity, the same as we are going to get intraday buying opportunity on dollar yen. Again, that's only intraday, because if we are going to get daily close around current level, Okay, so we are gonna to get the confirmation that we wanna go higher. But anyway, we are within possible supply zone, so bulls are buying on pullback or waiting for break, pullback, and then buying. Okay. Because I don't want to buy from the strong hand sellers. And I think that is a possibility that sellers are here around. Maybe not right now before the data, and maybe we are gonna to just make stop hunting and the pullback. We'll see. Okay, we'll see. Okay, so we have 15 minutes to go to US data. So what I'm gonna to do, I'm gonna briefly try to explain you. It's easy. A little bit more advanced risk approach, especially if you are a day trader. Okay. The only thing is, generally it's easy. It needs discipline. And maybe addictive, and I will explain you why. Okay. It's about the risk approach, right? Not about the trading overall, but it's easy, needs discipline, and could be addictive. It's all about the risk approach I'm gonna to present to you right now. Okay. The thing is, if you follow me on Twitter, or if it's not your first time in our room, you know that overall my risk is something between 0.2 to 0.5 per position. Okay. When I see that someone is advising 1% or 2% or more to their students, I'm sick. And okay, let me explain it a different way. Maybe if someone is really well advanced, and it's the most important thing is trading on his own account, but is advanced, let's say 1%, okay, but he shouldn't sell the advice to use 1% to trade on FX, especially if you are a day trader. All right, I've been explaining this few times already, guys. When you day trading few different crosses, right? Even not related to each other, but one stupid event like someone's comments, whatever accident, whatever, right? You've got 1% here, you've got 1% here, 1% here, all right? You've got 3 different positions, but one event, and with day trading, with lower volatility, your stops are quite tight. So with one stupid event, you have no, without possibility to influence or whatever, you are immediately 3% down, right? Immediately 3% down. And if you have a 3 days in a row, 3 bad days in a row, then within the less than week, you are 10% down. And then come on. And if you are trading more aggressively, then you can be 15 or 25% down, right? and then you are sweating and your head is not cool, and you've got the problem to take another position. You've got the problem because you are starting. Hi Brendan. Hi Brendan. And then you've got the problem to start to trading again, right? Once you have minus 10% after 3 days, for example, right? Then you start thinking, what the heck? What this guy is trying to explain me? So I'm not a fan, especially if you are a day trader. I'm not a big fan of the huge risk. I know, I do understand that some of you guys are simply not able to afford bigger amounts of your account. I do understand. So try to trade micro lots. If your distance between the entry and stop is too big, simply don't take some of the trades. All right. So if you follow me, or if you follow Land of Trading us on Twitter, then you know that my risk is something 0.2% to 0.5% as a standard risk approach, right? That's the first part, and the second part is that before I go and open the trade, right? My setup. Of course, once it's opened, the live will verify the rest. But before I will start to think about the open, I have to have at least at the very beginning possibility of real 1-to-3 risk-reward ratio, right? So means that if I want to open here, my stop is gonna be, let's say, here. 3 times this distance. I have to have free space on the left side, right? Of course, again, once I'm in, the live will verify, because we can have something like this and then bam, stop, or maybe stop at entry, at break even, whatever, right? Live will verify this thing. But at the very beginning, when I'm preparing my entry, I need to have enough space to the left side. It has to be at least 3 times my distance between the potential entry and stop. All right? So that's the first key. 0.2, 0.5, and at least 1-to-3 risk reward initial, right? And that's the my basic approach, and it's available on already on our channel on YouTube. Now, today I would like to show you a little bit advanced approach, taking into the consideration that I'm gonna risk 0.5. It's gonna be easy, but needs discipline, and you are gonna to see why, and could be addictive, and I'm gonna to explain you why. I'm using this approach I'm gonna to present you right now. I'm using this approach only for aggressive day trading. Instead of risking 0.5% at once, I'm dividing this 0.5% into 0.1, 0.15, 0.25. Okay. So my first attempt, my first position of the day, let's say on euro dollar, I want to risk, I'm going to trade euro dollar, let's say right now. My overall risk for this currency is going to be 0.5%. But my first trade, I'm going to risk only 0.10. So if I'm going to be down, 0.10 down. right? Next approach, second position, it's gonna be 0.15. Look guys, what's gonna happen. Even remember, to be for me to open the position, I have to have 3 times risk. So if I'm gonna to get home run here, I'm gonna to have 0.45. So anyway, I'm gonna be good for 0.35. Okay? But more, let's say I didn't get the full home run. So after the first trade, I'm done 0.1. The second trade, the initial was 3 times risk, but market went towards 2 times risk. I moved my stop to secure 1 time risk, right? And market pulls back to and hit my stop. So even I took 1 time risk, I recovered my losses, I'm good. Okay, that's tiny, but the percentage, the amount of the money you earned, of course, it's gonna depend on the amount of the money you have on your account. Okay. For one guy, it's gonna be really tiny cents. For another guy, it could be good dinner in a good restaurant. For someone else, it could be, I don't know, new car. All right. But let's say I'm done after the first trade. I'm done after the second trade with stop. So after 2 trades, I'm minus 0.25%. All right. So with the third trade, as you can see, now you can do your math easily. Even with 1 risk, I'm break even. All right. I'm break even. With 3 times risk, I'm 0.75 minus 0.25. I'm good from 3 trades, risking tiny. I'm good for 0.5%. I'm good for 0.5%. All right. Guys, we've got 2 minutes to US data. Is it clear or we need additional explanation? Why it could be addictive? Because I know guys, when I explained it to them, they started to expand. Okay, I'm gonna risk 2%. And they were trying to do some kind of the martingales and stuff like this. No way, no way. First, discipline. You've got your calculation. And the reason it could be addictive, as I mentioned, I know guys who are trying to rebuild this structure, doing some kind of the, you know, not putting stops, but starting with smaller sizes, and they were adding into the losing position. No way, forget about it. You've got the structure, and you're trading with the structure. Okay? Doesn't matter how big your stop is gonna be, because the bigger the size, the smaller the position. The bigger the distance between the entry and stop, smaller your position. But you are still risking the same amount of the money. Okay? Finally, you were wrong twice here and here. It's enough for you to get 1-to-1 risk-reward ratio to be break-even. Clear? Clear. Cool. Guys, we've got US data, so let's focus on US data for a second. By the way, I used the opportunity and I recorded this approach, so it's gonna be available on YouTube soon. So I'm gonna to stop recording right now. So the rest of the live trading room is only for people who found the time to join us today. All right. So let's wait for US data.